Hey traders, this is Blake Morrow with Trader Summit, and I'm so excited to have Mr. Michael Brown and Mr. Richard Matthews, both from, well, one's from Pepperstone, the other one's from One.io, but both from the same spot. Good to see you, gentlemen. How are you?
Hey, how you doing?
Hello, mate. I'm very well, thank you.
Great, great. Well, it's great to have you guys here on such a historic and epic and monumental week. I'm trying to talk it all up here, but
Okay.
but we do have a really
You've
big,
probably jinxed it now.
Yeah,
Yeah.
we do have a big week of central banks meeting. Obviously, I do want to tell our viewers that after we record this and it goes into editing, you won't be able to see it before the Bank of Japan or the Reserve Bank of Australia. So we're not even going to really talk about that. It's just, even though I do want to know, but we're going to forget that. We got way too much other stuff to talk about. First and foremost, let me jump over to you guys, and Michael, let me ask you this. I'll start with you, Michael. What do you think is the most exciting central bank to meet this week in your view?
Well, first of all, let me just apologize for us both getting distracted by a big picture of a Bitcoin that just came up on the screen behind us. That stole Dick's attention, Mr. Crypto. I didn't mean that.
How you arranged that?
No, nor do I. What's the biggest event this week? Well, honestly, I want to say the Bank of Japan, but this will come out after we've discussed that, so I'm not going to go down that route. And with them out of the question, it naturally has to be the FOMC. Although, to be honest with you, I don't really expect anything too significant in terms of fireworks from Powell and Co. on Wednesday. I think it's very much going to be a sort of placeholder meeting. The statement, obviously, rates are going to be unchanged. The statement should be pretty unchanged as well. Maybe a bit of a hawkish risk if they move the median dot higher to 50 rather than 75 bips of cuts this year, but that's not my base case. So yeah, the Fed's probably got the biggest potential for volatility just because of its global importance, more than, you know, by virtue of anything we expect them to do, because I think really they're just going to copy and paste the January statement, and then Powell will take the remarks he delivered on Capitol Hill 2 weeks ago and deliver them again at the press conference and say, come back in 6 weeks.
So you don't think any of this like inflation data that we got last week is going to influence them too much?
Maybe at the margin, and you might see the inflation forecasts nudged higher, but I think there's a big difference between what the market watches, which is CPI, and what the Fed watches, which is PCE. Because the market watches CPI because it's out first. The Fed watches and targets PCE because it's more accurate. I don't want to get too nerdy or into the weeds of the data too much. Well, Dick's already falling asleep. But the way that rent is accounted for in CPI, it has a much greater weighting than it does in PCE. So you might see forecasts nudged, you know, 0.1% higher, but I don't think it's going to be a game changer.
So I'd love to hear more on that, and I will. We'd love to. But Richard, what do you think is, if the Fed is going to be the marquee event of the week, you know, without the BOJ or the RBA? Are there any other central banks that you're watching this week out of the 14 that are meeting this week that have your attention?
You're going to make me really simple. One out of those 14, actually it's two, is it? FOMC and the Bank of England, obviously. I always enjoy Bank of England meetings and their statements and their sense and sensibility that they bring to the markets.
Now, I sense a lot of sarcasm in that comment. So
well, I was just going to say, we went out for lunch earlier, and Dick didn't even have a drink, and he's coming out with this.
Wow. Okay. Well, Richard, explain to me about the Bank of England, or explain to us about the Bank of England. And I just want to say that technically it looked like we had a kind of a false breakout last week in the sterling. So are you expecting much of a move there?
Not really. I mean, we've got inflation data out before the meeting. I think they're going to hold the two hawks who voted. Was it two hawks voted last time?
Haskell and Mann, yeah.
I suspect might just vote to stay steady as we go. But interestingly, we were talking over lunch that it's becoming terribly political now. I think, and I've said this several times, and I know you've laughed at me, and you always laugh at me anyway. I still think there's a very good chance that Sunak will be replaced as Prime Minister in pretty short order, and that the UK will have an election very, very quickly in May. And I think that that politicises the UK actually, and at the same time, I think the Fed is now becoming into political territory. They've got to cut, I think, by June. Michael thinks they might get away with by July, to avoid being seen as political. If they don't move, I'd say cuss, I don't know where that came from. If they don't move by June, July, the Fed, I can't see how they can do anything until February next year. And that's a huge gap. And the same with in a way, the Bank of England is worse off because the date of the election isn't known. So they haven't got this buffer. But I can't see that they're going to come out with anything terribly interesting. Inflation is still too high here. Prices are still going up. Minimum wage is going up. There's increases in council tax we have here. There's increases in pensions. So they're putting money into the system. I actually still think that inflation services is what, 6%?
Yeah, north of 6%.
Yeah, there's no way that they can cut interest rates with inflation at that level. So to me, my play, actually, I still quite like sterling. I really like the dollar. I quite like sterling. And the poor old euro is the, dare I say it, the ginger stepson of the currency markets at the moment.
Oh, God.
And I have stepchildren, and he's not ginger. So
well, you know, let me clarify something first of all, Dick. I wasn't laughing at you. I'm just laughing with you and the rest of the UK folk that listen into these shows, because you know, it's your political environment is almost as much of a circus as ours. I say almost because it's not quite there. But
yeah, but it's you know, you do wish that you had a strong political leader like they have in Russia, who I see was re-elected at 87.8% of the vote for him, a new record. I mean, it's absolutely remarkable. And I don't think any of our leaders can get more than 12.2%. But I do think that it's starting to bear on policy, will start to bear on policy. And, you know, you've got to see in the States 3 bad sets of data in the next 3 months, or 6 bad sets of data, the 3 unemployment and 3 inflation numbers. And they've got to be bad to allow them to hike, or they're stuck where they are till February next year, till after the inauguration. In my book, you know,
that does make sense. That makes sense to me. So, Michael, what other central banks? I know there's might be a couple others in play this week. Any thoughts on, you know, maybe the Swiss National Bank or the Norges Central Bank or Banxico?
Yeah, I'm going to stick very much to G10 with this one. We've got 14 central bank meetings, as you said. 6 of them are in G10. That gives me plenty to get my teeth into, to be quite honest with you. I think the Norges Bank is going to be a little bit dull, in all honesty, although the market only prices about 10, 15 basis points of cuts by August from the folk over in Norway, which might be a little bit dovish. So there could be a little bit of room for some repricing there. I think the Swiss National Bank is going to be a very interesting one, to be honest. I know we've both been talking about being bearish on the Swissy for some time now. I think the market's pricing about a 1 in 3 chance that the SNB cuts on Thursday, when they meet on Thursday morning. I guess the problem with the SNB is we know they just have this innate desire to surprise everyone. I mean, I guess it's almost like central banking back when you started in the market. You never knew exactly what they were going to do. So, yeah, the market price is a 30% chance of a cut. I reckon there's a decent chance that they might actually bring forward a cut. Inflation's right at the bottom of the SNB's target range. They target between 1 and 2%, I believe, and it's down in the low 1%. You've also got to bear in mind that one of the big concerns the SNB have is the value of the Swissy, and particularly the real appreciation we saw in the Swiss franc towards the back end of last year and the early part of this year. So what's the best way to stop appreciation in currency? Well, to cut rates. It would also help them get ahead of the ECB, naturally. And the SNB only meet quarterly rather than 8 times a year like everyone else. So if anyone is going to surprise and go early, I think the SNB could be the ones to watch. So there's nothing there that deters me from being bearish on the Swissy, because I think even if they hold rates, they're going to be pretty dovish in their language and guidance and teeing up a cut for June. So yeah, definitely one to keep on the radar. And yeah, just to add to what Dick was saying about the BOE, I really don't see any chance of a surprise from the old lady, to be quite honest.
They might talk sense. That would be a surprise. They might come up with a sensible comment.
I won't hold my breath for that one, I'll be honest. Yeah, I can't see them doing anything of any interest, to be quite honest. They're in just a waiting game like the rest of us. I think, as you said, they really want to see the Q2 inflation figures. The way our energy prices are calculated here in the UK is slightly bonkers, but to cut a long story short, they're going to fall a lot in April, and that will obviously have a disinflationary impact. But that data will only be known after the May meeting. So that kind of unlocks the potential for a cut in June. And until we get there, I don't think the BOE are going to do particularly much.
Going back to this, the Swiss franc, you know, one of the things I'd love to ask and get your opinion here is that you know, we've been, obviously stocks have been climbing. We're literally a brushstroke away from hitting.
I was going to say, you are having to look up to see how
I was looking at my quotes that are up here. We are very close to all-time highs, and we haven't seen any type of risk aversion in the markets in forever. It seems like since Dick was in uni. So I mean, you know, it's joking. But no, all jokes aside, though, what do you think? And Richard, based on your experience too, I'd love to hear your input here too. You know, if we did see some risk aversion, what do you think would happen with the Swiss franc? We know that the dollar naturally will catch a bid. Yen, it's questionable, and in this environment probably would. But how about the Swiss franc? What do you guys think?
Can I just jump in just to pick up on something you said there? I know you made the comment sarcastically, but I'm going to pick up on it. You said there's no risk out there.
I was being sarcastic. There is huge risk.
There is huge risk out there. But the market is insulated, in my view, the market is insulated from the risk by what is a relatively supportive policy backdrop, and one that should become more supportive as the year goes on and as central banks begin to cut rates, they bring quantitative tightening to an end. And the market knows that what everyone used to love and talk about in the Fed put or the central bank put, now that inflation is, and I'm going to rile him here, seemingly under control, the central bank put is back and it's alive and it's well. And I think that is what is giving investors quite a lot of confidence to go, actually, yeah, there's a risk that the labour market rolls over. Yes, there's geopolitical shenanigans going on. Yes, there's a lot of elections this year, the biggest year for elections ever. But central banks have my back, and I'm happy increasing my exposure to risk as long as Jay Powell and Christine Lagarde and all the rest of them are sat there with, you know, potentially 500 bips worth of cuts in the back pocket to deliver if, you know, the proverbial does hit the fans, without putting too fine a point on it.
Yeah, I do agree with that. However, I always want to take a contrary point to this. I still think there's inflationary risks there. And I think that the problems in Israel and with Hamas are a long way from being figured out. They've still got hostages there, and I wish they'd bloody release them. Even if it did come to some sort of resolution, the Houthis aren't going to back away. They're having a wild old bit of fun over there. Iran, to me, is a rogue state, and I apologise to any Iranians listening, but that's how I view it. So I think there's certainly risks there. I wouldn't want to get long of oil because I've been wrong, but there is a risk that you could see an oil spike like you saw in 73, which would throw everything out of the basket. Talking Suez Canal and canals, I understand the Panama Canal is virtually on drought and is very, very low levels, and very little shipping can get through there at the moment. So I think there are inflationary risks lurking. Geopolitically, I think there's huge risks, as you know. I think that Putin's going to be emboldened now. I'm not sure I'd want to be sitting in Poland in 6 months' time if Trump gets in. I think that he'll just pull the rug on Zelensky and let Putin get on with it, and that puts that sort of eastern flank up for grabs. So I think there's huge risks over there, which the central bank doesn't necessarily cover.
No, I agree.
And those are my worries. but the stock market carries on regardless. It doesn't matter.
So-
there is no risk as far as they can see.
Okay, so going back to my original question, how do you think the Swiss franc
we
would
didn't talk
act?
about the Swiss franc at all.
Yeah.
What? No.
I mean, I just fell asleep I was back there. Just kidding. No, joking, guys. But how do you feel the Swiss franc's going to react should risks emerge?
I suppose.
Yeah, I mean, if you want a European haven, buy it. But
Do you want a European haven?
well, yeah, So
No, seriously, do you want a
no,
European
you
haven?
don't. If you want a European haven, you buy the Swiss. If you want a European haven, you probably need your head checking. So buy the dollar and get the yield instead.
Absolutely.
Okay. All right. Well, then let me ask you guys this. Well, actually, I'm gonna target our Bitcoin whisperer. Bitcoin looks a little shaky.
Another one for you.
Nope, the other one. Richard, you have been spot on with your Bitcoin calls, but we're struggling here at the all-time highs. This last week, it looks like above 70. It's Bitcoin's getting a little, air sickness up there.
Yeah.
How do you feel about Bitcoin near term, and where do you think it's going to go?
I think longer term it goes higher. I think it sees 100.
Okay.
Honest with you. He's going to walk out now. You laughed at me when I said it's going to see 50.
Yeah, I know.
But I do think that it is a big giddy. You are going to see a little bit of a setback. But I was talking to Michael over lunch, and I was at a conference in Monaco last week of family offices, and they're saying how much they were putting into cryptocurrencies, including Bitcoin, because they want the privacy that they can't get from their regular bank accounts and from credit cards, et cetera, et cetera, et cetera. So there's genuine flows in there. It's not all just spec flows. The numbers going to ETFs are huge numbers. So I think longer term it looks good. And to a generation, not my generation, obviously, his generation.
But not me.
But not him. Why would I buy the dollar with the currency being debased continually by more and more debt in America? I mean, it's quite frightening, isn't it, how it accelerates. So I think there is that fear in the younger generation of debasement of currencies. They don't understand gold, and they just see Bitcoin is digital gold in a way. I've never been a great gold fan, but to me, it's a similar sort of argument.
Sorry, I was distracted. I was just looking to see if any pigs had started flying past the window when he gave that call. But
listen,
not yet.
You laughed at me when I said it was going to go up as much. I didn't think it was gone up as much as it has gone up, I've got to say. But you also laughed at me at my call about the Fed earlier this year, that all these calls for cuts that they were wrong.
And you know what? There's a lot to be said for the experience that you have, Richard. And I think the
That's very polite.
He's old.
But the whole market really was on the other side of your idea that you still came on here to the Trader Summit literally almost every week and said, I still think that the Fed's next move is going to be higher. Now, it's to be seen if that will actually happen, but those expectations of rate cuts are slowly disappearing, and there is a chance that we could walk away this week with the market believing maybe only 2 cuts are coming this year, and we're still very early into to the year. So
but we're not actually being argumentative about it. I'm going to be argumentative. We're not. If you think about the discussion we just had about the timing, that they run out of time in June. So you're talking about 2 cuts between now and, all right, taking your point, between now and July. And that's pushing it. I still think they might hike before they cut.
Actually, that's where I disagree with you.
What, the hike?
No, well, on the hike, but also on the cuts.
Right.
Because I think there's a difference between, when we're talking about monetary policy getting political, I think there's a difference between the first cut and a continuation of the easing cycle.
But they're not going to do it in June and July. They're not going to do it in consecutive months. They're going to do it.
They'll go June and September.
Do you think they do September? Brave. Hey, there we go.
There we go. We've made a market.
Yeah. I do see your point.
I do see your point as well. I do think that the risks start to surround the Federal Reserve and their, about how political they are, even if they did one rate cut after July. I get it. And I think it's going to be a tough call. But we're going to leave it up to the Fed and I'm sure we'll walk away from this week with a lot better idea of where we think the Fed's going. But I do want to ask you
I was
this.
going to say we'll walk away with more questions than answers.
Yeah.
But
We might. That's entirely true as well. So, but I want to end on this note. Let's start with you, Richard. What's your best trade that you're looking at this week that you think is going to be the place that traders need to be?
Really boring. Buy dollars, wear diamonds.
Still buying dollars.
Buy dollars, short the euro. The age-old thing. I say that in my nappy. Well, actually, I can't be saying my nappies because the euro wasn't invented yet.
Yeah.
I've been saying it for 20 years, and I've been like for 20 years, and I still say it. I still think that the ECB is going to be the first to cut. I'd still want to be long in dollars and short euros.
All right. Well, Mr. Michael Brown, what do you think?
Well, this is going to be quite boring because I pretty much agree with everything he just said, and that's not because he bought me lunch earlier. But yeah, I think long the dollar. Don't really want to touch the pound. Don't really want to touch the euro. Short the Swissy, like we discussed.
Bill and Ben.
And if we get, well, I don't want to talk about the yen because this will go out after the BOJ, won't it?
It'll be most of these.
I
kind of want to put you on that spot right now.
I was going to say the other one. Just if we get any dips in equities, I'd be buying them.
Yeah.
I'm not. Yes, I'm bullish. I'm not saying that doesn't mean we get a 5% drawdown at some point. But I reckon a move lower probably would be contained to 4, 5, 6%, and that's when you step in. The 50-day moving average in the S&P isn't that far off that sort of a pullback either, actually. So yeah, I think
Probably do the market good.
Yeah, take a bit of froth out. Any knee-jerk move lower in equities, I'd buy the dip because I think the path of least resistance is still higher. So yeah, a bit of an odd one, kind of typical correlations breaking down if you're long dollar and long risk, but I think there's enough there to make the dollar trade work from a yield and growth perspective compared to other G10s, and then to make the equity trade work from the policy backdrop that we discussed earlier. So they'd be the two I'm looking at the minute.
Sell bonds?
Wait for the dots. I think the other thing with the dots is
What, the pivot?
well, yeah, the longer run dot. A couple of Fed speakers have said recently that they're considering moving their long run Fed funds rate estimate higher. And obviously, if they do that, that's going to cause a bit of a shake up in the belly and the long end of the curve. I don't think it's not my base case for now, but I think we just over the next sort of 4 or 5 meetings, we see those long run dots gradually shift higher. And I guess that's the big risk for bonds. So, and obviously the front end, you're looking at the 24 median. So yeah, I wouldn't touch them just yet. Maybe ask me next week what I do with the treasury market.
well, I actually probably will. And I want to say, gentlemen, it's always great getting together with the two of you and having you here on the Trader Summit. What's the best way, Michael? What's the best way? Well, both of you. What's the best way for us to follow your work?
Plenty of ways to follow. I'm on Twitter, Mr. M Brown, and also a little bit of product placement with the Pepperstone logo in the background. Pepperstone.com. We've got a whole host of research pages on there. Some good stuff that my good friend and boss, Mr. Chris Weston, writes, and also a few bits and bobs that I'm chipping in on there as well. And of course, YouTube, some videos as well, where you also feature, Blake.
Richard?
I don't know what to say now.
Well, if you were wearing your hoodie,
yeah,
I would have.
Promote yourself.
I'll promote myself. You can normally find me on Twitter being rude to Mr. M Brown, talking about football, which is at Dickie Matthews with a 5 instead of the S on Twitter. Or you can find me on @one.io on our website or on our Twitter feed.
Is it actually 5 instead of an S? I've never noticed that. There you go. You learn something. Or go and wander around Monaco or any other Mediterranean marina, and you'll probably bump into
Genoa next, and then Palma. I might even be in West Beach. I might be in West Beach next week.
Well, look at you go, Richard. I'm sure you're enjoying every moment of it, as you should. And I want to say thank you, gentlemen, for your contribution here at the Trader Summit. And if you guys and gals are listening and you have any comments, you want to jump down below and and talk to these guys about it, please do. And make sure you subscribe to this channel so you don't miss any of this exclusive content here at the Trader Summit. Gentlemen, thank you so much for being with us. I do appreciate you both, and I look forward to the next conversations that we have.
Fantastic.
Thank you, Blake.
Thanks,
Take care,
Blake.
mate.
Cheers now. Bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.